Welcome back. Well, Greenpanel Industries posted a muted set of Q2 numbers. Company witnessed margin dip in plywood business. To discuss more on company's business outlook going forward, how is the demand looking, we are joined by Venkatramani, who is the CFO at the company. Mr. Venkatramani, good afternoon. Always a pleasure speaking with you. Well, in Q2, you did mention that MDF volumes showed decent growth in domestic markets. However, export markets have slowed down. Is that a situation which has continued in Q3 as well? And in the near term, do you expect this to continue?
Okay, domestic demand continues to be good, although it was partially impacted during the festival season in October and also the first 10 days of November. And we are hoping that it will pick up soon, and we should be back to the numbers we achieved in the earlier quarter. So as far as exports are concerned, exports volumes are improving. We have been successful in getting fresh orders from new customers. But yes, we are facing some pressures as far as export realizations are concerned. So I expect that export realizations will be lower as compared to Q2.
Afternoon, and thanks for joining in. So I'm reading out a note from Jefferies, which is broadly about the home building industry. They're not talking about your company, so let me clarify that at the outset. But they're saying that many channel partners are indicating weaker construction demand presently, though they're hopeful of a revival in Q4. And Delhi's pollution control has impacted real estate there. Is this something which you are seeing on the ground?
Not really. I think, yes, normally Q3 is a weak quarter because of the festival season. People generally prefer to do their homes, their furniture before the festival season starts. And then there's a bit of lull, and then demand starts to pick up from around the middle of November once the festivities are over. But there could be some impact. The RBI continues to increase interest rates. We expect that there could be some short-term impact, but considering that the number of residences just have been sold during the first 6 months, we are looking ahead to robust growth, in the succeeding quarters.
So, Mr. Venkatramani, you mentioned that export realizations, they will decline on a quarter-on-quarter basis. So what does that mean for margins overall? Will you still stick to your 26 to 27% margin guidance that you had given? And since domestic demand, it has picked up, so has the export demand, what does it do to your volume guidance?
Okay, as far as the margins are concerned, I don't expect any significant impact on the margins because exports are just about 15 to 20% of the total volumes. And we will have some savings in this quarter on the raw material front, especially on the chemical resin side. So I don't expect any significant impact on the margins. So our margin guidance continues to be strong for the next 4 to 6 quarters. We don't see any major headwinds that way. In fact, even if we see some impact on realizations next year once new capacities come up, the volumes that we are targeting should more than enable us to maintain the margins or maybe slightly improve on that. And recently we have also launched a new product, which is a fire retardant MDF. And we expect that this will enable us to improve on our market share.
So your volume guidance of 12 to 18% for FY23 stays? You're reiterating that?
No, not really. That was the guidance we had given at the end of the last financial year.
Okay.
But post-Q, we had revised it down to 12%.
Okay. So FY23 volume guidance is at 12%. And margins will be maintained in this band of 26 to 27%, right? You said...
No, actually what I said was that for the next few quarters, we expect margins to be around the 30%. 30%. For the MDF segment. At the consolidated level, it could possibly be around the levels you mentioned, including the plywood business. But for the MDF, we expect margins to be around the 30% level for the next few quarters.
Got it.
Okay, so you're talking about newer expansion, newer capacities which are coming up in FY24. What would the initial capacity utilization look like? And both in your MDF and plywood, what is the current capacity utilization? Similar to Q2 levels?
On the MDF front, we would currently be at around 80%, 85% capacity utilizations, and that's the number I expect for the current year because we increased capacity by about 20% last year. So I think, yes, we'll be fully utilized as far as the old capacity was concerned, but as far as the new capacity is concerned, I think that will probably be utilized in the next financial year. And the expansion that we are planning will be commencing production in the first quarter of FY25.
Okay. And for this capacity expansion in the first quarter of FY25, will you be looking to take on some debt, or are you open to the idea of raising equity?
So a major part of the expansion will be financed by internal accruals, and we will be taking some debt. So I think probably about 65% internal accruals and 35% debt. But once the expansion is completed over the next 2 years, we should be back to net debt-free status.
No fresh equity fundraise plans?
No, not at all.
Okay, Mr. Venkatramani, last question before we let you go. Your superior product mix is around 12%. Do you plan to increase that, and will that be margin accretive? Of course, it says superior product mix. So what does this pie look like?
Okay, that 12% is not for the MDF segment. That's actually for the plywood segment.
Okay.
On the MDF front, our value-added products are almost 50% of the total volumes.
All right, got it. Thank you, Mr. Venkatramani, for joining us, taking us through what the outlook is looking like and what the industry situation all